Assalamualaikum and good morning, my students. Okay, this is Emmawati, and we are going to continue our lesson with our new subtopic. So today we are going to look on the method on how should we do the posting from journal to ledger. Okay. So in our previous class, we have already discussed the answer for the journal entries of the exercise that I have asked you to prepare. And this is actually the journal entries from that question. So today what we are going to do is we are going to do the posting from journal into ledger. Okay, so the meaning of posting means that we are going to transfer the information, the data, the accounts, okay, from our journal into ledger format. So on your left is your journal, and on your right is the pictures or the format of ledger. So if you look at this sample, so this is okay, the one that I highlight here is actually to represent the format of one account. So in this one account, we will have this section that looks like a big T. So this is why we make a T account. Okay. So on our right is our credit, and on is the day. So we are going to apply the double entry system in preparing the ledger entries. So today what we're going to do is we are going to learn on how should we do the posting from journal into ledger. Okay, from journal to ledger. I'm sorry, okay, from journal to ledger. So let's start with the first entry, which is on January 1st. So what we have in our journal entry on January 1st is we have cash at bank and capital credit. So it means that from the first entry, we should have two different accounts. One is cash at bank and the other one is capital. So I have prepared the this for ledgers here. So I'm going to use it to prepare our T account. So I will name our first account cash at bank. Okay. So we have two accounts here. So the other one would be capital. So let me reduce the size. Okay. Alright. So we have two accounts here. Cash at bank, and capital. So what we have in journal entry is we have cash at bank debit. So it means that in your ledger, you should also have your ledger cash at bank account debit. So the debit entry for cash at bank is capital. So it means that in your cash at bank account, you should do the data entry with capital. Okay, so don't forget to write down the date. So this is in January 1st, and the amount is 50,000. So 50,000. Okay, so we have here in the journal entry bank is debit with 50. So same goes to your ledger. You have your cash at bank. Okay, debit. So this is debit, right? So in your ledger is also debit. So what is the debit entry for cash at bank? Capital. So you record the account capital in the cash at bank on the debit side. Okay. Now let's proceed to the capital account. So in the journal entry, we have capital on the credit side. So we should also have capital account. So this is the name of the account. Okay. So capital. So it is written on the credit side of the account. It means that in the ledger entry, we should also have on the credit side. So the entry for capital is cash at bank. So we should write it down as a cash at bank. Okay. And don't forget the date. It is January 1st. So January 1st. And the amount is 50,000. So you should have 50,000 on the credit side of capital account. Okay. So that would be the first ledger entries that we have posted from journal to ledger on January 1st. So we can see here the concept of double entry is applied in the first date, okay, in the first entry, okay. So see here we have two accounts open, and one account that is followed with another account credit. Okay, you should not debit both accounts, and you should not credit both accounts. Okay, so you will have same date here, January 1st and January 1st. Okay, and same amount, 50,000, 50,000. Okay, so that would be the process of doing the posting from journal to ledger on January 1st. So now let's proceed to the second transactions, which is on January 2nd. So we have here, we have two accounts on January 2nd, which are cash in hand and cash at bank. So far we have already had one account. I'm sorry, we have already had cash at bank, which has been opened on January 1st. So we are going to use the same cash at bank account. So it means that we need to open one new account, which is cash in hand. So let's have this here, cash in hand. Okay. So on January 2nd, we have cash in hand debit. So it means that for your cash in hand account, we should also have it debit. So the date is on January 2nd. And the debit entry for cash in hand is cash at bank. So we should write it down cash at bank. And then the amount is 15,000. So 15,000. And next is we have cash at bank. So we're going to use the same cash at bank account that we had in January 1st. So we have it on the credit side of cash at bank. So we should have it here. Okay, on the right side of your ledger. So the date is January 2nd. And then the double entry for cash at bank. So this is cash at bank. So the debit entry for cash at bank is cash in hand. So write it down, cash in hand, and then the amount is 15,000. Okay, you look at here. Okay, cash at bank, the amount is 15,000 on the credit. So cash at bank on the credit 15,000. Okay, so that would be the entry for the 2nd of January. Now let's finish our ledger with the balances of the posting. So we proceed to January 5th. So January 5th, we have office equipment and cash at bank. Again, we are going to use the same cash at bank account, and we need to open a new office equipment. So we will have new T account for office equipment. So we have equipment debit on January 5th. So in January, entry for office equipment is cash at bank. So cash at bank. The amount is 5,000. 5,000. Okay, don't forget the debit entry. If you have your office equipment debit, so you should also have the other account credit. So our other account is cash at bank. So this is the cash at bank, and we have to start with the date first. So January 5th. So we simply have to write down 5. Okay, 5 is to mention about the date. And then double entry for cash at bank on January 5th is office equipment. So write it down, office equipment on the credit side. And the amount on January 5th is 5,000. So write it down, 5,000. As simple as that. Now we will have our entries on January 10. So in January 10, we have another new account, which is furniture account, and we are going to use the same cash in hand account that we had here. Okay, so furniture, right? So furniture account. So this is our new account. So I'm sorry, okay, furniture, and IP. So furniture, we have it on the debit side on January 10. So January 10. And the debit entry for furniture is cash in hand. So cash in hand on the debit side of furniture. Okay. And then the amount is 1,700. So 1,700. Now let's do the debit entry for furniture. So we have cash in hand. So since we have debited furniture with cash in hand, so uh, next is we need to credit cash in hand with furniture. Okay, so the date is January 10, same date. Okay, so cash in hand is double entry with furniture. So we have furniture here of the cash in hand. And then the amount is 1,700. So 1,000. Alright. Okay. Next, let me finish up the posting with the rest of the journal. Okay, journal to ledger. Okay, everybody, please look at how should I do this. Purchases. Opening a new purchases account, And then we will also have a new account for city. Thank you. Okay. So I'm going to rename it city. So purchases is on January 13. Entry for purchases is city. And the amount is 10,000. And we have city's account on the credit side. So on the same date, January 13, we have the entry for city is cases. So we will have 10,000. Okay, next we have entries with cash in hand and sales. So far we don't have any sales account open. So we are going to have new account for sales. Okay. So I will rename it to sales. So we have on January 17, cash in hand debit 6,500 and sales credit 6,500. So I choose to do the entries on the debit side first. So we will use cash in hand account. So it is on January 17. So the entry for cash in hand is sales. So account on the debit side of cash in hand with the amount of 6,500. Okay, don't forget your debit entry. So we have cash in hand debit. So we should also have sales credit. So it happened on the same date on the is write down amount for sales is credit 100. So 6,000. Next is on January 21st. So we have one new account for Ramu. So let's have Ramu here. Okay. Delete this. Let's rename it to Ramu. Okay. So we have Ramu on the debit side. Okay. So it happened on January 21st. So the debit entry for Ramu is sales. So write down sales on the debit side of Ramu's account. And then the amount is 5,000. So 5. Okay. And then the entry for Ramu is sales. So we are going to use the same sales account. So it happened on January 21st. So write it down 21st. And then we have Ramu. Okay, the entry for sales is Ramu. So this is why in the credit side of this account you write it down Ramu, and the amount is 5,000. So 5,000 credit. Okay. Next we have January 26th. So we have two accounts of rent and cash in hand. So since we don't have any rent account open, so we are going to have a new account for rent. So let's have new rent account. Okay. So let's delete this first and rename Ramon to rent. Okay. So we have rent on the debit side. So the date is January 26th. So the entry for rent is cash in hand. So rent is on the debit side, so we should have it on the debit side. So debit entry for rent is cash in hand, so write it down cash in hand for the amount 750. Okay, so debit entry is cash in hand, so we're going to record credit side of cash in hand with, so start with day followed with debit entry. So we have rent for 700 and last is on January 30 where we receive cash from Ramu. So we are going to use the open cash at bank account and the open Ramu's account. So cash at bank is debit. So January debit the cash at bank with Ramu. Okay, and the amount is 5,000. And for Ramu's account, so Ramu credit side, so credit Ramu on January 30 with cash at bank by the amount 5,000. Okay. Okay, so we have done with the posting. So these are the accounts that we have opened from the posting from journal to ledger. And if you do the counting here, we have 2, 4, 6, 8, 10. We have 10 different accounts that we had in the ledger entries. Okay, so what we have done so far was we have done the posting from journal to ledger, and it also means that you have opened your accounts. Okay, awak telah membuka akaun-akaun awak. Okay, now at the end of the month, since we have come to the end of the month of January, so what we need to do next is we need to close our accounts. Okay, so how should we do the closing? Okay, now let's use a simpler example first. So I'm going to use capital account for our first discussion on how should we close the account. So what you can see here in the capital account, okay, so in the capital account, in this capital account we only have one entry which is on the credit side. Okay, so in order for you to close this account, okay, you must make sure that the amount on the debit is equals with credit. So since we only have credit entry, so it means that you need to have a balance on the debit side of the capital accounts because we want to make it even, we want to make it equals. Okay, so what should you do is, okay, you find the last date of the month of January. So the last date would be January 31st. Okay, so in the month of January, the last date is January 31st. So we are closing our capital account with balance CD, balance carried down. Okay, so we want to make it equals on the debit and credit of capital account. So since we have credit capital 50,000, so on the debit we should also have the same amount of 50,000. Okay, alright. Okay, so this is actually the ending balance of capital account in the month of January. Alright, so the next is after you have balance CD, you need to have balance balance will be the balance BD would be on the first day of the following month. So on the following month, we have February. First, let me do the underline here. Okay, how should I do this? Okay, okay, tepat. Okay, next. Okay. Sorry. Allah Allah. Okay. So after January is February. Okay. So the first day on the following one is February 1st. Okay. So balance CD is on your debit and your BD would be on your credit. The entries from debit to credit. So you have balance CD 50,000. So next you should also have your balance BD on the credit side with the same amount of 50,000. Okay, 50,000. Okay, so this is how should you do the closing of accounts. And how did we do it? Okay, we do it by make sure by ensuring that your total debit is equals with your total credit. So this would be your ending balance. We name it as a balance CD. If you have your balance CD at the end of January 31st, you have it on the debit side. So on the following month, which is on February 1st, okay, the first day of following month, you will rename it into balance BD by the same amount of 50,000. Okay. All right. So this is how we do the closing for capital account. Next, let's look at how should we close the cash at bank account. So we can see here for cash at bank account, we have two entries on the debit side and two entries on the credit side. So we can see here on the debit side of cash at bank, the total is 55,000, and on the credit side, we have a total of 20,000. So it means that the total on the debit of cash at bank is more than the credit total. Okay, so 50,000, 55,000 on the debit, but 20,000 on the credit. So in our previous discussion, we know that in order for us to close our accounts, we must make sure that the total debit is equals with credit, right? Okay. Now, what we can do in cash at bank account, you have to look which side of the account is more. Okay, is bigger. Okay, so we can see here on the debit side is bigger than credit side. So let's write down the total for the debit side here. I'm giving some space here because I want to write down balance CD on the credit side. So I will have 55,000. How do I get 55,000? I'm sorry, okay. How do I get 55,000? 50,000 plus 5,000 is 55,000. Okay. And then on the credit side of Cashback Bank, I only have 20,000. But to close the credit Cashback Bank with 55,000 because I want to make it equals on debit and credit. So it means that on the credit side, you need to have balance CD of the difference between 55,000 and 20,000. So what would be the amount? What would be the amount? The amount is 35,000. Okay? So 35,000. So if you add these three together, 35,000 plus 15,000 plus 15, I'm sorry, 35,000 plus 5,000 plus 15,000. So you have back 55. So this 35,000 is actually your balance CD. I'm sorry. Okay, I'm sorry. Okay. Balance CD. Carried down. Baki akhir. Ending balance. So the end of January is 31st. The last day of January is 31st. So on January 31st, you have balance CD of 35,000. How do you get 35,000? Okay, the 55,000. Okay, from the bigger amount of debit account. Okay, debit side of Cashback Bank. You minus with 15,000 and 5,000. So you get 35,000. So this is actually the ending balance for Cashback Bank at the end of the month of January. Okay, so these are the balancing figure. Okay, the total. I'm sorry. Okay, the total for Cashback Bank in the month of January. So next, we have to bring this balance CD into the following month. So we will have the first date of the February. So we will have first. So balance CD will become balance BD. So take back the amount. Okay, transfer the amount of 35,000 into balance BD. That's it. Okay, so we have done with the balancing or the closing of accounts. Okay. I try to um this is supposed to be, I'm sorry, let me do this first. Okay. Alright. So this is supposed to be like this. Okay. Alright. Okay. Right. So you have a double line under 55,000 and only one line above 55,000. Okay. So that would be the right format of closing your accounts. So you're going to do the same procedures in closing your account. So every account need to have balance CD. Okay. But for this special case, for this account that had no balance CD, like Ramu, I think Ramu's account. Where is my Ramu? Okay, this is my Ramu. Okay, this is my Ramu's account. Okay, so you can see here we have Ramu's on your debit 5,000. I'm sorry, 5,000, and on the credit side is 5,000. So the balance is equal in Ramu's account. Okay, so in this case, for this Ramus account, you don't have any balance CD because the amount are equals. So what you need to do is just to close your account with no balance. Okay. Right. Okay. Next your task is okay for this video. I need you to complete with the closing of accounts and please find the values of balance CD for the rest of the undiscussed accounts that we have here in our ledger entries. Okay. So I think that's it for our video class for today. So I'm gonna see you again with our online classes with some more exercises for you to complete and for us to discuss in our next few classes. Okay. So that's it for today. Please take care and stay safe. Assalamualaikum and good morning.